and welcome to another Major Market Movements End of the Week Market Review for July 17th, 2015. I'm Quad G, and we're taking a look at the PM complex, starting off here with gold. And I wanted to highlight here where today we came down and we're very close to producing a new long-term low, going back all the way to, I believe, 2008. 2008, 2009, below 1130, taking out the last major swing low back in November of 2014. And so, but with that, I'm not expecting a major capitulation. I think it's just going to become an incremental new low, and based upon how we fell apart right here. Remember, 1180 was the level to beat for a long time, and that held up for several months, I think even over a year, before it finally broke down. You can see we got a rule of 4 breakdown there at about 1180 with this very sharp move to the downside, which is kind of where we may be at right now. Let's zoom in on it. I think we could be right about here, and we could, just like we cut through 1180, I think we very possibly could see gold cut through 1130. And in this particular case back here, in October, early November 2014, we saw the slice come down and drop 50 points, and then it bounced right back up, came up over 100 points. We got up here into the 1300s off of that low, so about 170 points of movement. That was a very significant low. It certainly was, looking to me at the time, that we may have concluded a major low at that time. Obviously, that turned out not to be true. With all this slow, choppy sideways movement, we're just basically consolidating for another push lower, and that's what we're seeing now. I do think in this particular push to the downside, the last one, when you start to develop incremental lows, when you're forming a major bottom or a bottom of any type, you start to see the steam being taken out of the market to the downside. And so I suspect that this last break here that went from 1180 to 1130, 50 points, I don't think we're going to see a 50 point fall from 1130 going down to 1080. I don't think that's what we're going to see. Instead, I wouldn't be surprised if we got a 61.8% Fibo of that 50 point move, which would be about $31. So I do think it's possible this particular move to the downside would produce an incremental low that could tag, I'd say, roughly around 1100, the 1100 level, and then we get a bounce from there. And I think it'll be a pretty significant bounce. We may see it bounce up, hit this trend line, and come right back down, maybe for a double bottom around that 1100 level later on in the year. I see that as a possibility. Or a bounce up that breaks this trend line, which would be a rule of 4 breakout, since we've already tested this trend line 1, 2, 3 times already. So a fourth test may let loose for a surge to the upside. That's another possibility. So anyway, this market's been kind of boring over the last few weeks. Now with this development, it's moving into some exciting territory that could form a bottom fairly soon here. So we'll be watching for that as we approach the August, which has been notorious for producing major bottoms in this market about the middle of August. So that's a very key point in time that we'll be looking to see how the market reacts to, which is just a little under a month away or so, about three or 4 weeks. So the QG3 here still into a bearish alignment to the downside. We are closing underneath the lower Bollinger Band, and the last time we did that, you can see the market gave a little bit of a bounce. So I think next week we can see maybe a little bit further descent, maybe break that 1130 level, but we are pressuring that lower Bollinger Band. So I would expect a violation of the lower Bollinger Band for maybe 3 days maximum before we get a bounce, at least back up to maybe test the 20 DMA, or actually, I guess I should say the 10 EMA is another appropriate target for a bounce. Upon seeing that extreme condition. Let's see. Gold on the weekly here, solid close lower, lowest weekly close in several years, going all the way back to 2010, actually. So let's look at something there. So yeah, that's just an indication that we're it's closing solidly into the bottom 10% of that weekly range. Encourages more increased more of a downside move to come is what I'm trying to get at. With this candle closing in the bottom 10% of the range, you get about 85% probability of further follow through to the downside into the following week. So that's what I'm expecting. And EWO, not much to see there. If we do, back up here on the daily. We do have, if we do get the low here, we are going to set up very likely a positive divergence between the last swing low and the EWO here. So that's going to be bullish. I think it would take a significant drop to wash that out, which I don't think we're going to get at this time. And gold on the RSI, we're into oversold territory here, down below the 30 level. The last time we were here underneath 30 was, where there was 30 line, right about there, was back in the March 2015 timeframe, where the price just kind of, after a quick drop, slowed down and eventually formed a significant bottom and gave a bounce. So we're right into that territory again. We do have, if we do slip a little bit lower, we will still have a slight positive divergence between this last swing low here at 1130. But it wouldn't take a whole lot from this point to wash that out. It might still be intact if we hit 1100, but if we break below 1100, that positive divergence would probably be washed out, is my guess. The MACD is open to the downside on the daily, and on the weekly, we're open to the downside as well. All right. So gold's still bearish here in the short term and maybe even the midterm, but I do think we're in oversold levels. We should expect a bounce to be realized here soon, possibly next week. But I think a more significant bottom may take a little bit more time and possibly find itself completing somewhere in about mid-August. All right, let's take a look at silver. All right, silver producing a divergence with gold. Gold seeing new lows. Silver is not. It's still got a higher low from the last little swing low here in the short term. I think we could be seeing a bounce out of this as well. And we see that we got the sharp move down, the pop up, and now the slow, choppy move to the downside. So we got the fast move and then slow move. One poster on the website, he characterized this with the Adam and Eve move. double bottom type move where you have a very quick, sharp move followed up by a very slow, soft move, that double bottom. So silver may come very close to this bottom at about 1465, maybe even overlapping it slightly, and then I think we'll see a bounce. Silver on the weekly, we did last week we didn't have this bullish hammer candle, and so far this week we have dropped down, but we have not violated that hammer candle just yet. We'll see if it still holds next week. And silver still maintaining a positive divergence here in the EWO, and same here with the RSI. Got the positive divergence still intact. The MACD on the daily is still open to the downside, and on the weekly open to the downside as well. So silver's in a bearish position here, no doubt, though I do think we may see a bounce here fairly soon. I don't think it's going to go very far. It may just be enough to get up to about 1550 with an off chance of getting up here to maybe the a lower 16 level, maybe even test the upper Bollinger Band before we entertain another possibility of another sell down. So let's see what we get. Platinum. All right, so platinum's continuing its sell-off here. QG3 still in a bearish alignment, though we're pushing the lower Bollinger Band again. And platinum on the weekly. Solid weekly close into the lows there, bottom 10%. 85% probability we'll continue to see selling into next week. Platinum on the daily. We do penetrate this lower trend line here, but we do still maintain the double positive divergence in the oscillator. And same thing with the RSI. We still have the double positive divergence there in the RSI, though it's very close to being washed out a little bit lower. It looks like we'll be able to break the extreme in the RSI here. So we would be reduced down to only a single positive divergence at that point in time. And platinum on the weekly, MACD is open to the downside, and it's going to be open to the downside on the daily as well. So platinum's still very much in a bearish position here. No sign of turnaround just yet. Let me go to the weekly here, back up. We are seeing this weekly close goes all the way back to about 2009. So we're entering the market space of 2009, which is very close to where we saw another our previous bottom there in late 2008. I don't think we're going to violate that 2008 low. I think we'll bounce somewhere above it. But it may take, again, going into the August time frame before we see it. All right, so let's move on to the Elliott wave charts here. All right, so gold here has while we're below this orange trend line here, we're still in bearish territory. And I do think that blue trend line, the lower blue trend line, is a potential target. And currently it's sitting below. Let's look at it closer. That trend line is currently sitting below at about 1105. So I do think we could come down and test it, maybe even put a slight low under 1100, possibly, somewhere in the August time frame, and then we'll see a bounce. If we bounce far enough, obviously, and test the upper blue trend line, that's going to be a very large potential rule of 4 breakout to the upside, but that may not come for another several months from now. I do want to point out the COT, the commitment of traders data here that I showed you in one of the reports recently. But I wanted to go over this here in detail, showing you how the last few significant lows has seen the total open interest move up above about the 138,000 mark. And with it, every time that the total shorts have been up in this area, roughly above, say 110, 120,000 contracts, you've got, you end up seeing a significant low. And we're certainly in that territory right now with this new decline. So this is an indication to me that we're moving into oversold territories, and that's going to be this is good range, good territory for a potential turnaround, a good size bounce out of this as shorts are likely to cover with their profits. And same things happening with silver, which we'll get to in a minute. Silver here, again, I think we're going to see another bounce here for, I think maybe this could be an A wave, this could be a B wave, and then maybe a C wave up into wave 4 possibly, and then another move back down into 5. I see that as a potential. And here's the COT for silver. And since the data basically started for this back in 1986, and since then we've never seen this much open interest in silver ever since 1986, if you can believe it. And same with total shorts. Never seen that many shorts in this market either at this level. And this is after a market. This market has sold off about 70%. So again, this is really good territory for setting up a potential bottom here, a good strong bottom. Obviously, it's not going to happen just yet, but in the subsequent weeks here, I do think we might be getting set up for an excellent opportunity to get in on the long side. This is GDXJ. I didn't want that. All right, GDX. It looks like we're entering some bit of capitulation to the downside. Let me put on the volume here real quick. Okay, I just want to double check that. We're not quite at capitulation levels yet, but I think we could see that maybe next week with another move to the downside. We could see the volume pick up a little bit further into, say, above the, let's see, where was that at? About the 83 million mark or so. It would be a capitulation territory, and that would be another indication that the market could be exhausting to the downside and could set up a potential bottom. And I also wanted to point out here, this is the QG3. I've changed the color of the 3 EMA to red just to point out how today, this is the daily chart. You can see that the day is closing underneath the lower Bollinger Band. So I wouldn't expect to see that for more than 3 days. So maybe at the most Monday or Tuesday, and then we see a bounce going into next week. But more interestingly, on the weekly, I saw this today. The 3 EMA closes actually just underneath the lower Bollinger Band. So this is getting into extreme condition to the downside, which on the weekly scale, we haven't seen that happen in the QG3 on the weekly since back here when it took place, going to the upside. Zoom in on it. You see this week here, we saw the 3 EMA close just above the upper Bollinger Band. Next week saw an incremental high, set a very significant high there at about, the high was at 55.25. And then the price buckled over and started heading down south again very strongly. So we are basically replicating that same potential here with this week's close. So I do think we'll continue to see some selling going into next week. Maybe I think we could be testing that 1530 level, 1520. Obviously, we almost hit it today. What was the low today? At about 1537. I think it could dip down a little bit further and then possibly bounce again. And maybe even put in a very significant low. We'll have to see how that week turns out. But I wouldn't say this is very good territory for getting short here. That's for sure. And if you are short already, you may consider backing out at least one tranche here coming into next week, for some profit taking. All right. Okay. So that's going to conclude my coverage of the PM complex for this week. I hope you all have a great weekend, and we'll be talking to you later. Adios.